Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Ramzan Karmali. Let's get to the three things you need to know today. First up, markets are on edge as investors keep a close eye on the labour market and trade uncertainty. US stock futures are pointing just slightly in the green on the main, but really lacking in direction at the opening bell. The job market is slowing down. The August ADP report showing the private sector added 54,000 jobs last month. That was worse than the estimate of 68,000. It comes ahead of the monthly Labour Department report on Friday. On the trade front, President Trump's moving forward and asking the Supreme Court to take up its tariff case, a court ruling late Friday that most of his tariffs are illegal. Plus, President Trump's reshaping of the Federal Reserve is moving ahead today. The president's nominee for the Federal Reserve Board, Stephen Miron, faces his nomination hearing this morning before the Senate Banking Committee. A key question he'll be facing centres around Fed independence after President Trump's attacks on the central bank. And a busy morning for trending tickers. Some key names to watch on earnings today. In the tech sector, Salesforce and Figma coming under selling pressure. Salesforce earnings beat estimates, but its weak guidance hitting shares as investors fear the return of the company's AI's investments are delayed. Figma's first earnings report as a public company, earnings in line and a revenue beat, but that's not enough for investors. And American Eagle is one bright spot in today's trade, and the company's CEO says Sydney Sweeney's controversial ad helped boost sales. All right, let's get a check in on stock futures. And markets are kind of lacking direction. It seems though the Dow Jones was in the red earlier after the release of the ADP jobs number, but now ticking slightly higher. Well, I think it's time for us to dig into our top stories of the day. Well, as you see, stocks mostly higher amid trade uncertainty as President Trump asked the Supreme Court to allow tariffs, and the ADP report giving us a fresh read on the labour market ahead of the August jobs report out tomorrow. Plus, the nomination hearing for President Trump's pick for the Federal Reserve Board of Governors happening today on Capitol Hill. Well, joining me now, senior markets reporter Inez Ferre, senior reporter Ali Canal live from the Nasdaq, and Fed correspondent Jennifer Schoenberger live on Capitol Hill. Ali, well, let's get straight into that ADP report. What's your take on it?
Another soft print on the labor side here. The ADP private payroll report showing that just 54,000 jobs were added during the month of August. That's short of expectations for 68,000 and barely half the gains that we saw in July. Now, in terms of specific sectors, leisure and hospitality did see the most jobs added. Those sectors adding 50,000 jobs. Not a total surprise there considering we're in the summer months. We also saw construction up 15,000, and construction has been a bit stagnant as the housing market has been frozen. However, we have seen mortgage rates come down a bit, and that is expected to be a boon for the construction industry at large. But other areas did pull back last month. Transportation and utilities, for example, lost 17,000 positions. Education and health services lost 12,000. Now, I do want to say that healthcare, that industry overall has been leading a lot of the job gains that we've seen over the past year. So that's something to watch if that trend reverses. Now, ADP's chief economist, Neela Richardson, called the labor market whipsawed by economic uncertainty. She cited labor shortages. She cited that uneasy consumer, along with AI disruptions as catalysts to that uncertainty. And of course, all this comes ahead of that critical August jobs report. We saw massive revisions earlier this summer. We had Trump firing the BLS chief. So all eyes are going to be on this report, especially since it's the last piece of major labor market data that we'll be seeing before the Fed is expected to cut interest rates later this month. Markets are really pricing that in. We're now at 98% odds of that happening. And if you take a look at the bond market, you're seeing that reaction as well. We're seeing long-term yields tick lower. The 30-year yield is now trading firmly below 4.9%, down around 2 basis points. The 10-year yield is now lower than 4.2%. We did see that bond market sell-off earlier in the week, but now that we're continuing to see this cooler labor market data, that's reversing a bit here.
Yeah, and we'll be watching that crucial jobs report tomorrow. But we've also had quite an interesting report out from the Bank of America on the labour market for graduates. What does that tell us?
Yeah, so interesting report here from B of A. Unemployment among young workers is continuing to creep higher. Now, new college grads are facing jobless rates above the broader workforce, which is a complete reversal from what we saw before the pandemic. According to this report, more than 13% of unemployed Americans in July were brand new entrants to the labor force. That's the highest share since the late 1980s. And that sentiment is showing up in some survey data, too. We spoke with Glassdoor senior economist Daniel Zhao on the show yesterday. And he was telling me that employee confidence is hovering near record lows. And it's not just Gen Z, it's also those senior level workers. Now, this sentiment is showing up more in those white collar positions. So think financial services. And we have seen those layoffs in that industry over the past year or so. But he was telling me that even though layoffs make headlines, that really garners a lot of the attention, this lack of hiring might be the bigger story here, because not only are these new entrants to the labor force not able to get into these positions, but then those that are already employed are unable to climb the ladder. And that is key, because if employees feel stuck in their job, that leads to a lot of discontentment. So, this is just another example of a labor market that economists have just described as really stuck. And I think what we saw with ADP only confirms that cooling factor.
Ali, thanks for that. Let's move on to Inez Ferrer, our senior markets reporter. Inez, is it fair to say that markets are kind of lacking direction this morning?
Yeah, I mean, we have seen the markets pretty muted when you take a look at what's happening right now. We've seen the major averages not moving that much. Part of this, of course, is the question is over what will happen with the tariffs now that President Trump has sort of fast-tracked the tariff question to the Supreme Court. So the question is, what will happen with bonds? What's happening on the long end of the bond market? As Ali was just mentioning, we have seen some slight movements there recently, but we haven't seen too much of a reaction with the markets. And as far as commodities are concerned, we have seen gold that's been moving higher in recent sessions. Today it's down a bit, but as far as Bitcoin's concerned and some of the cryptocurrencies, we are seeing those take a leg lower.
Yeah, just on the tariff front there, President Trump's move to request the Supreme Court to fast track his case. Doesn't this just add to more tariff uncertainty? Surely the markets should be feeling a little bit more jittery than they currently are.
Yeah, and it's a muted reaction given the uncertainty about the tariffs. I mean, you have Bloomberg analysis that is saying that if Trump is defeated in this case, then you could see the average tariff rate, that's about 16.3%, cut by at least half. And the U.S. would also have to return billions of dollars in tariffs. Now, there was an interesting note from B of A talking about the impact of tariffs and inflation and bonds. And basically what B of A analysts are saying is that the persistent inflation risk isn't fully priced into the market, that the market is pricing in that you will see inflation in the near term, but that it will be muted longer term. And they're raising this question, whether you're going to see inflation persistent higher for longer, because the movement on prices when it comes to inflation, prices are moving slowly. And so that could stretch out sort of the inflation scenario. So you could see inflation higher for longer, and then that would have an impact on commodities. The risk is that you would see commodities go higher, and of course, you would see inflation higher as well.
Well, one commodity you mentioned earlier was gold, and we've had a pretty interesting call from Goldman Sachs out this morning on the precious metal. What exactly did it say?
Yeah, so what they're saying is that they expect gold prices to go higher. And most of the street is expecting gold prices to go higher into next year. But they're looking at $4,000 an ounce gold by mid-2026. But they're saying that there is a risk that you could see gold go even higher than that, and particularly if you have Fed independence that is eroding. And that is what would send gold even higher. They're predicting perhaps as high as $5,000 an ounce if everything stays the same. And this would be because you would see also private investors sort of following what central banks have been doing, which is loading up on gold. So if you see private investors going away from treasuries and more into gold, then in that scenario, you could see $5,000 an ounce gold. And they're not the only ones that are talking about this, the Fed independence question. Other banks, JP Morgan also put out a note basically saying that the long-term impact on gold could be significant if you have erosion of Fed independence.
Okay, well, we're talking about Fed independence, and who better to talk to about it than Jennifer Schoenberger? Later, we'll be hearing from Stephen Myron when he's in front of the Bank Committee. What should we expect him to say?
Good morning, Ramzan. President Donald Trump's nominee to the Federal Reserve Board, Stephen Myron, set to testify in his confirmation hearing this morning before the Senate Banking Committee, where he's expected to uphold a pledge for central bank independence. Myron expected to tell lawmakers in prepared testimony that, quote, "In my view, the most important job of the central bank is to prevent depressions and hyperinflations. Independence of monetary policy is a critical element for its success." He went on to say the Federal Open Market Committee is an independent group with a monumental task, and I intend to preserve that independence and serve the American people to the best of my ability. While Myron's appointment to the Federal Reserve was always a chance for President Trump to shape the Federal Reserve, his recent firing of Fed Governor Lisa Cook has raised scrutiny and attention on this morning's hearing, both for what Myron will say and for what lawmakers will ask. Ahead of this morning's hearing, Democrats led by Ranking Member Senator Elizabeth Warren sent a letter to Committee Chair Tim Scott asking to postpone the confirmation hearing and instead hold a hearing on the president's attacks on the central bank and the economic and legal implications there. Senator Warren expected to say in opening remarks in this morning's hearing that, quote, "Illegally removing a Fed governor is a key step in Trump's scheme to destroy the independence of the Fed and turn it into his own personal toy. He wants to install his lackeys so that we'll have a Fed that uses its power to please the president, but that can't be trusted to keep inflation under control." Republicans expected to walk a real tightrope here, Ramzan, as central bank independence will be under the microscope, and while they're still trying to uphold confirmation of President Trump's nominee. Back to you.
Well, thank you, Jennifer, Inez and Ali, for your insights. Okay, well, coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now, time for some of today's trending tickers. We're watching Apple, JetBlue and T. Rowe Price Group. First up, Apple. The iPhone maker is reportedly planning to launch an AI-powered web search tool for Siri, a move that could turn up the heat in the AI competition with OpenAI and Perplexity AI. According to Bloomberg, Apple is working on a new system that will be integrated into the Siri voice assistant and is aiming to release the service in the spring. An AI move that Apple has discussed, also eventually adding the technology to its Safari web browser. Okay, next up, it's JetBlue. The airline is highlighting that third quarter revenue will be better than its original expectations, as demand for air travel remained strong throughout the summer peak. JetBlue lifting its outlook on operating revenue per available seat miles, as well as lowering its guidance for capital expenditures. The company highlighting momentum from earlier in the summer carried forward into August and through the Labor Day holiday, both of which were marked by strength for bookings within 14 days of travel. Finally, a look at T. Rowe Price as it announces strategic collaboration with Goldman Sachs. The firms are teaming up to broaden access to diversified public and private market portfolios. A central focus is on providing a range of wealth and retirement offerings that incorporate access to private markets. Well, in this collaboration, Goldman Sachs intends to invest through a series of open market purchases up to $1 billion in T. Rowe Price common stock, with the intention to own up to 3.5%. Well, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's Trending Tickers page. President Trump is asking the Supreme Court to step in after an appeals court upheld a ruling that would make some of his tariffs unconstitutional in a petition filed late Wednesday. My next guest says if trade uncertainty persists, it could weigh on markets through September. Well, joining me now is Young Yu Ma, PNC Asset Management Group Chief Investment Strategist. Young Yu, thanks so much for joining us. Well, let's start with the Fed and the fact that we have a hearing on in front of the Banking Committee and the concerns about the Fed independence, which you mentioned. I mean, is Stephen Miron's confirmation worrying you?
Thanks, Ramzan. It's great to be here. I think the confirmation is actually ultimately going to be relatively straightforward. There's going to be a lot of questions, certainly, from both sides of the aisle, but that's not a major focus. I think the markets will ultimately look past that, and really what's on the horizon is what's the Fed going to do for the rest of the year in terms of cutting rates, and also what is going to happen with the tariffs and the uncertainty that currently looms over the market, including sectoral tariffs, which may come this month as well. So it's definitely a time of heightened uncertainty, but I do think that ultimately the markets are going to take some comfort in the Fed's trajectory of rate cutting, but oftentimes after the first rate cut, you have the narrative that quickly takes hold that the Fed is behind the curve. So I wouldn't expect a huge bump from the first rate cut in terms of the market reaction, because that's probably pretty well priced in at this point.
So we see that there's a 98% chance, according to the markets, that we will get a Fed rate cut this month. But after that, what are you expecting?
Well, at PNC, we do expect 2 more rate cuts after the September one for the rest of the year, so 3 rate cuts this year, and even another one into January or early next year as well. So we do think what's on track is a rate-cutting trajectory and a rate-cutting program for the Fed. And once this gets more underway, I think the markets will be able to take greater comfort. Usually the first rate cut really doesn't have a big effect on the economy. It's more the idea that the Fed is going in a direction of persistent rate cuts for the foreseeable future that we think is going to have more of an effect. But that can take a while to set in before the market really coalesces around that idea.
Now, something you mentioned earlier, tariffs. We know that Japan and the US are getting closer to sort of tying up all the loose ends in its agreement on autos. How vital is that for both Japanese car manufacturers, but also US car manufacturers?
Well, it's important to see progress on all of these things. I think that one of the concerns in the market is just how slow progress has been with some of the trade deals. These are hard to work out once you actually get into the details, and there are a lot of countries that are lined up to actually still work out details with. So it's just good to see progress. I think that the auto industry in Japan has a much bigger sway on the market than it does in the U.S., but still in the U.S., these are very important markets.
And what do you make of President Trump's move to ask the Supreme Court to sort of hurry his case through in terms of a decision on tariffs and whether they're illegal or not? What do you make of that move?
Well, I think it's a good move, actually. I think the market, from the market standpoint, the market does want clarity on this. And the appeals court did rule that the use of emergency powers was not justified or legal, and it's going to go to the Supreme Court. It's hard to know how the Supreme Court is going to rule. We're not taking a position on that, but perhaps there's a middle ground that the market would like to see, that even if the tariffs are not upheld, that they don't have to be refunded to the importers.
Now, we're just starting this September month. We know that September traditionally isn't probably the best for investors. What should, with all this sort of tariff uncertainty, with the fact that markets are close to record highs, should we be expecting maybe a bit of a correction, or do you think we're upwards and onwards and upwards?
Well, it's a great point. September is the weakest month, and it's the only month of the 12 months where, on average, if you look back over many different historical timeframes, you have a negative return on average in September. It's not by a lot, but it is something that is there in the data. I think with all the uncertainty that is in the markets right now, and we are in this post-earnings season lull, that it probably is going to be the case that the market trades a little bit heavy here. We could see a bit of a pullback. We don't think it's going to gather momentum to the downside, but until we have greater clarity on some of the uncertainty that's hanging over the market, and until we get toward next quarter's earnings seasons, where some of the tech strength that we believe will continue to persist in the market can actually shine through. We think that probably is now a choppy time in the market, but also a time to look for opportunities, not a time to be frightened away from the market for pullbacks of 2, 3, 4, 5%. We think that's probably more of a buying opportunity than a cause to really have greater caution in the market.
And just very quickly on the bond market, it seems like the 30-year yield has now eased back a little way off 5%, now below 4.90. Should our worries about the bond market, are they over?
Well, there's a lot of worry about the bond market, but what's interesting is that yields have stayed reasonably range-bound, whether it's the 30-year Treasury, the 10-year Treasury. There's a lot of concern that of the bond market or yields falling too much, and there's a concern of the yields rising too much based on perhaps pricing pressures or the deficit being too large. But if you look at what's actually happening in the bond market over the past couple of months, it's been relatively stable. We actually think that stability is probably likely to continue. There's a push and pull that's going on right now in the bond market. There are some elements that are pushing up yields a bit, but there's also deflationary elements such as AI that are putting some downward pressure on yields. So overall, we think it's largely in balance if we think about those longer-term yields and the market showing that. So it's not, in our minds, a main source of worry or contention. It is something that, sure, on the short end, the Fed's going to cut rates and bring down yields, but the long end is probably going to be relatively stable, maybe a slight bit of pressure downward on yields, but not a lot on net.
From PNC Asset Management, many thanks for your insights.
Thank you.
Okay, coming up on Yahoo Finance, opening bid, our very own executive editor, Brian Sozzi, joins us now. Brian, what's coming up on the show?
Ramzan, what's popping? So lots going on over here on opening bid. This tech trade, the sell-off here in the pre-market on Salesforce, C3AI, Figma, frankly, it's upsetting me. So we're going to dive into that, provide some analysis. And then speaking of C3AI, that company has a new CEO. We have both the founder, Tom Siebel, and the new CEO on opening bid very shortly.